Hello and welcome. Here on the island, we're pretty laid back about the sound quality of the podcast. As long as I filter out the sound of the seagulls, I'm happy. However, today Mark will be talking about Focusrite, a brand name that will be familiar to podcasters and musicians who do studio recordings and take their audio quality seriously. So while I feel guilty about echoes and sibilance, I hope that you enjoy this, episode 13 of The Desert Island Investor. This episode of the podcast is generously hosted by Progressive Equity Research. Visit their website at progressive-research.com. So, good afternoon, Mark.
Good afternoon, Paul. And first of all, some news to share since the last episode, and that's that you've actually retired. So, hallelujah and welcome to the promised land. And I've got to say it's encouraging that Desert Island Investor has taken off to such a degree that it now warrants your full attention.
Well, yes, indeed. Thank you very much indeed for those kind words. I am indeed now a man of leisure. So I can totally focus now on grilling you about your investment choices. And today we're discussing one of your smaller holdings, Focusrite, an audio products business that markets hardware and software products, and quite appropriately has the ticker symbol TUNE, T-U-N-E. So to get cracking, as usual, the base numbers, please.
Yeah, well, as we speak, Paul, it's got a market capitalisation of 269 million, a lowly yield of 1.3%, a PE of 9.5, and that's based on the current share price that I'm looking at now of £4.55.
Okay, when were they floated and when did you first buy?
Well, they were formed in 1985 and they listed in 2014, and I took a modest starter position in July 2019 at 534. And after 4 years, I've now made another modest addition. So this is another baby step. I've 33 stocks in my portfolio, and Focusrite was sitting in position 33. And this latest small purchase has elevated it to the dizzy heights of number 27. So it's quite tightly packed at the bottom of the portfolio.
So you've held for 4 years and you're back in the range where you started from, but in between they touched £18.
Yeah, something happened over this period, which people may still remember, COVID-19. So, most companies took a short-term temporary hit, but Focusrite experienced a temporary boost. Suddenly we had, lockdown, and many people sought a way to entertain themselves. And lots of Focusrite products are used by, I suppose, what you could call hobbyists, those people who want to produce music for their own enjoyment, and also people doing what we do, podcasters. And we've increasingly seen the development of the home studio. So music recording is no longer the preserve of the professionals. There are a lot of frustrated amateurs out there. Just got to look at Britain's Got Talent. And, on this joint point, Paul, as well as playing your bamboo flute here on the island, I believe you yourself have also recently invested in a keyboard. So have you yet mastered the Grieg piano concerto?
I haven't. I'm actually struggling to remember chopsticks at the moment, but it is on my retirement list of things to do. So anyway, having seen £18 pass you by, do you feel that this was a lost opportunity to exit?
No, I'm looking for long-term stocks that I can ride at my leisure, not short-term trades where I'm glued to a computer screen. So just as some of my stocks cratered during COVID, I didn't become despondent, and I've witnessed this countless times in the past. They're not suddenly bad companies, and likewise when stocks went on a moonshot like Focusrite, I kept my euphoria in check. While people were piling in, it might be, not impossible, but it was unlikely to last at those kind of levels. So in both cases, they're affected by short-term market conditions. Now, don't get me wrong, Focusrite had an excellent COVID, and this was despite, they're not immune to the component shortage that affected, many other businesses, and a couple that we covered previously. So, the rise to £18 sounds like hitting the mother lode, but given its lower, percentage positioning of the portfolio, this hardly moved the dial or, catapulted me into a new wealth bracket.
Right. So what first attracted you to Focusrite then?
Well, it seemed a very interesting business. I recognised the rise in the hobbyist and the home studio, and a lot of my peers, like yourself, have latterly, perhaps, children have left the nest or retired, and they've more time to return to or take up a musical instrument. So, it appeared a very profitable business and had good net cash, which is something I like. It had £26.2 million worth of cash in April 2019. And, the company had a turnover of circa 75 million. And the chairman, Phil Dudderidge, he incidentally owns, just under 33% of the business, which focuses his mind on the business's well-being. He was the founder, and also he got a touring sound engineer for Led Zeppelin, which suggests that he knows a thing or two about the industry. And also CEO Tim Carroll, he was a professional keyboard musician. So just going on about Led Zepp, Paul, I believe you once went to see them though, didn't you?
I did, yeah, in 1975 at Earl's Court.
Right, okay.
It was very loud and very long. It was a long...
Yeah, so instead of a stairway to heaven, you're looking for a stair lift to heaven now, are you?
Oh, very funny. Are we going to get all of that, for the rest of the series?
No, you're fine, Paul. You're fine.
All right. Okay, so any particular reason why this stock has not previously moved from first base in the portfolio then?
Well, I'm sufficiently aware to recognise that, in the field in which this business operates, it's outside my circle of competence or my natural understanding. Nevertheless, sometimes promote a stock from a watch list to a starter position and find out over time that I can command a sufficient comprehension. So some of the stocks we've previously covered, be that Tesco, MP Evans or Smurfit Kappa, I believe I've got a good understanding of what they actually do. And in short, I could explain them to my 85-year-old mum. Now, on Focusrite's website, on their About Us, they refer to art ribbon tweeters, analog synthesizers, sound reinforcement, groove boxes, and sonically transparent. Now, to me, this sounds like the Bantu language of Swahili. And, also, could I effectively identify any headwinds on the horizon? Say in the emergence of competition. And, also they've got a lot of brands. They've got 11 brands. These are, I'll read them out. They're Focusrite, Focusrite Pro, Martin Audio, Optimal Audio, Adam Audio, Sequential, Linear Research, Oberheim, Novation, Amplify Music, and Sonox. So, there's three deterrents there within, there's some more compelling candidates elsewhere for me to top up. I've got companies on which I've got a greater command and offered better value. And, Focusrite have also been prolific in their acquisitions, which means that a lot for me to absorb and see how successful they've been, and at the same time that the price has been stretched at, £18, which, with respect, I'm not going to be touching it at that level. So in many ways, I think this is more of a company that, you could make more of an informed decision of, Paul, because, I think you're more techie and gadgety than I. And I believe that you do have some experience as a consumer of Focusrite product.
I've never bought a Focusrite product, but I'm aware of what they do. They have a range of digital audio interfaces, which are probably the most recognizable product. And these are used by musicians and podcasters to enable them to connect, say, two microphones or a microphone and a guitar to your laptop, so you can record music or the podcast. So, there isn't a guitar jack on a laptop. So the Focusrite products provide various inputs, and they control the quality of the sound from the instruments in the microphone, and then they just feed the balanced information to your laptop down a USB cable. So we record our podcasts from 2 remote locations using an online host. But if we were sitting across a table from each other, then yes, I'd probably buy one of their digital audio interfaces, and so we could plug both microphones into it. They do have some competition. A company called PreSonus and one called Behringer offer similar products, but they are generally a bit cheaper. And a company called Universal Audio and Rode also offer products which are generally a bit more expensive. But Focusrite do have an excellent reputation, and their Focusrite Scarlett 2i2 audio interface is apparently one of the best-selling audio interfaces in the world.
All right. Right. Well, one thing in its favour is that it caters to hobbyists, and they often have a lot of passion for this pastime. If you go onto YouTube, there's numerous product reviews with people talking very animatedly in an excited fashion, and certainly they're talking about it more excitedly than they generally talk about stocks. So people often pay a premium for something that gives that fulfillment and joy, Paul. And I was just it's not like buying soap powder or insurance. I'm just thinking, what's your thoughts from a marketing perspective?
It's very similar to golf. Golfers will spend, well, not all of them, but those that can afford to will spend thousands of pounds on golf equipment in order to try and improve their game. And in the audio industry, again, the quality is the thing that they're always chasing. So yeah, they're using the quality as the key selling point, I think, with their range of products, and it certainly seems to be working.
It's a bit like, I know very little about music, but if I go to, there's a group and they're doing a sound check and they're giving it all the 1 2 1 2, and it seems to last forever, and I can never hear any difference, Paul. So the higher up that you go, is it more of is it lesser rewards, do you think, or what? Once you get to a basic level?
When you get to the sound engineering at concerts, it's really far more complex than I ever imagined. But I've seen a few YouTube videos of people working the sound desks. Everybody wants it to be loud because it has impact, but at the same time, it's quite a skill getting it so that it's loud at the front of the auditorium and loud at the back of the auditorium and the sides. That Led Zeppelin concert was that loud, I had to leave the auditorium briefly. I think that within about 2 seconds of them starting, there were at least 3 women who were leaving the concert carrying babes in arms. And I'm thinking, why would you bring a baby to a band that had a reputation for being the loudest in the world, I think, at the time?
Now, that's obviously something for us to think about when we go on tour and the Desert Island Investors at the O2, Paul, when we're playing to packed houses, Yeah. So, Focusrite, they've won a number of awards, and primary amongst those are 6 Queen's Awards for Enterprise, which I suppose now are the King's Award. And these aren't thrown around like confetti. So, the Queen's Award for Enterprise and Innovation, they won that in 2008, 2018 and 2021. And the Queen's Award for Enterprise in International Trade, they received that in 2012, 2016, and 2022. So again, from a marketing perspective, how valuable are awards, Paul? Does this genuinely provide, potential traction for a business? I often hear people using the term award-winning ahead of their product, but they don't mention what the award is. And I often see people attending industry dinners wearing dinner jackets and ball gowns and brandishing a trophy with lettering on it. In short, Paul, does this translate into pounds, or is it just a good night out? And I'm just thinking about this for when we start to receive, the first of many nominations and awards for this podcast.
You're quite right. You do see a lot of trade magazines where there's the endless photographs of people in dinner suits and standing there with their trophies. And I have no idea what value that has. I think if you start seeing logos that represent awards on products, how much of an impact that has on the buying decision, I've no idea. I mean, it'd be interesting if somebody had any statistics to support the fact that having an award logo on your product improved your sales. It could just be down to price. Unfortunately, it depends on the product. I mean, my microphone cost £80, and I think your headset came sellotaped to the front of a magazine, didn't it? So it's
You're shattering the illusion now, Paul. Let's move on.
acquisitions can be transformational and disastrous, and as you say, Focusrite have been busy in this area since you first bought the stock.
Yeah, they've made 5 acquisitions, which I'll run through. So that's since I invested initially. So in July 2019, they purchased Adams Audio for £16.2 million. They're a German developer and global distributor of professional studio monitor loudspeakers. Next, in December 2019, was Martin Audio for £39.2 million. But that included, they had £4 million cash, so that's a net £35.2 million. And like Focusrite, they're based in High Wycombe, so that was an added convenience. And they design, manufacture, and distribute premium professional sound systems. And their core markets are concert touring, production, portable sound systems, and installations. After that was July 2021, and Sequential, who are a Californian high-end analog synthesizer company. That was £18 million. March 2022, Linear Research Holdings, based in Letchworth. That was £12.6 million. The business had £1 million in cash, so that's a net £11.6 million. And then lastly, in December 2022, Sonox, who are based in Oxford. This was for £9.1 million cash. And again, they had some cash itself, £2.1 million, making a net £7 million. And it's a designer of audio processing software plugins for professional audio engineers. So they've had the checkbook out, and collectively this comes to 88 million. And, there's been a lot of activity to follow and absorb, and, this is a much bigger group. Now, I mentioned net cash that initially partly attracted me. Now, have all these acquisitions resulted in a heavy debt burden? Well, cash in April 2019 was 26.2 million. And at the most recent trading update on the 14th of September, net debt was at the 31st of August, was just 1.5 million. So over that period, there's been a cash swing of 27.7 million against those acquisitions that cost 88 million in total. So that shows that it's had some really good cash generation. It's paid this debt off very, very quickly. Now, those acquisitions, quite understandably, have had a substantial rise in the revenue, within the same, trading update. Now, revenue for full year 23 is expected to be not less than 177 million. Full year for 2022 was 184 million, and EBITDA between 38.2 million and 39 million, as against 41.7 million. So, the last full year before I bought on, the 31st of August 2018, revenue was 75.1 million and EBITDA 15.5 million. So you can see in that 5 years, this business has more than doubled in size, Paul. Perhaps, I would just say, perhaps something that's helped depress the price is the strong comparators that it's having COVID, that we're, got to understand these are unsustainable, given the change that we've got back to a normal lifestyle.
And as well as size, I take it the acquisitions have changed the profile of the business.
Yeah, those different acquisitions have presented Focusrite with a broader offering, and this now falls into 2 categories. Content creation, let's think about studio work, which is around 78%, and audio reproduction, which is based around live events. That's about 22%. And, that encompasses, from coffee shops to concert stadia. So as you can imagine, live events, hardly existed during COVID, during the restrictions that we had, large groups of people coalescing. But, that's come back a lot stronger now where, albeit, it's a smaller side of the business. And the business has a nice geographic split. North America accounts for 41%, EMEA, 38%, and, rest of the world, 21%. And, if you look at content creation, Focusrite identify 5 separate categories. That's, I don't know where we are, the aspiring creator.
Oh, that's us.
The passionate maker. Is that right?
Yeah, we're both of those.
Yeah, the serious producer, the music master, and the facility. So, right across the spectrum from amateur hobbyist to studio professional. And then on the audio reproduction, that caters for, for festivals, concerts, nightclubs, houses of worship, and hospitality venues. So, the business has now got a spread of risk.
Now, you believe that Focusrite has a niche offering on LSE?
Yeah, people have varied and different musical tastes, but there's very few people who don't enjoy music, in one form or another. And I'd say it's part of the human condition. And probably early man enjoyed making noises either by, just beating a tree stump with sticks or singing in an echoey cave. And, every culture participates in music, be that, chanting during the Maori haka, or Inuit throat singing. So, it stirs our emotions in different ways and reminds us of times and places. And, we've got a national anthem, we sing happy birthday, hymns at weddings and at funerals, and, very often, the last thing on the order of service is the curtains come together is your favourite song. So, if you look at the market you're involved in, and its potential lifespan, and in this case, music, I'm going to make a bold prediction in that, it's always going to exist. Now, that doesn't necessarily mean it might change, in how it's recorded or how we consume it, but I think, music will be an ever present. So again, Paul, what do you think?
Yes.
Right.
That is the only answer I can give to that, Mark, really, because, yes, it's not going away anytime soon.
Yeah. Or else there's a death pandemic goes around the world, Paul, and we all lose the ability to listen or something like that. So within Focusrite, I believe within Focusrite, there's numerous, musicians. This was within the workforce, DJs, audio engineers, and live sound specialists. And I'd imagine it, that this is a benefit for the company in that, operating in the field that it is, that it's, an exciting and creative field, and keeps your workforce interested and, and engaged. I spent my career, if you can call it that, within the paper and packaging industry, and I could see people's eyes glazing over at dinner parties when I was speaking to them about what I actually did. Now, on the whole, I enjoyed, what I did, but whilst it may have fed my family, it didn't feed my soul, Paul. Well, now that we're unfettered, Paul, by our work, we can be true to ourselves by doing this. At least, if nothing else, can't we? We can say what we want.
Yes, we can. Yeah. I probably won't, but I mean, yes, you can. You can say what you want. Right now, from what you told me, the restriction on building your position does not necessarily lie with the company, but with your own makeup. So what do you mean by that?
Yeah, I mean, I touched on it earlier on, about my understanding of this industry, and my understanding of this sector. I think there's been some quicker wins elsewhere for me, and there's businesses that are easier for me to comprehend, and that they've required less resource and energy on my part. This might be because they're basically easier businesses to understand, or just my personal knowledge. If I got an insight to a particular industry, and I often hear pundits tipping a broad range of companies, with great authority, and but a lot of these people have to they have to sell content. They can't say when they're releasing a tip sheet, well, I'm nothing red hot this week. They've got to come up with something. Well, I have no such powers, Paul. I've probably got 2 or 3 good ideas a year. So I'm happy to hold this stock, within my portfolio. But I would say generally my larger holdings are the ones I understand best, and this is where I put my energies. That's not to say that I understand number 7 in the portfolio better than number 8, but in general terms. And, I think that, given my lack of, I'll call it deep understanding of this market, I'm happy to make a small addition, in what's a balanced portfolio. But I would never envision it becoming a core holding for me. And I remember once when we worked together, I said to you, that I've got a number of weaknesses, Paul, but, one of my strengths is being aware of them. And then after a pregnant pause, you responded, you said, have you ever wondered if, being aware of all those weaknesses is actually your only strength? I don't know if you remember that, Paul, but I was a little bit wounded by that, but I think I've got to understand that, I understand the whole market, the appeal of on a broad sense, but actually, that deep kind of gut kind of understanding, I don't think I've got it really. For this to be a core holding, but I'm protected, I think, by the breadth of the portfolio that I've got.
Right. Okay. No, I don't remember saying that, but I haven't been writing the insults down.
I have, Paul. I kept a diary.
Okay. So for some perspective, I did ask you if you could provide some profile to the portfolio and how it is constructed for benefit for our listeners.
Yeah, well, all portfolios are unique, aren't they? How they're constructed, and it's a moving target. But currently, of those 33 stocks, so the top 10 account for 57% by value, and the top 15 it's just short of 75%. So it's very top heavy and has a long tail. So the fortunes really depend on how those top 15 stocks perform. It's top 15-ish. And that's really where I spend most of my time, monitoring these. That's where I put my energies, because if number 33 bombs, then, it's a shrug of the shoulders. If it's number 1, that's clearly more problematic.
Right. Well, thank you, Mark, for that analysis of Focusrite. And now time for Question in a Bottle. And this time the question is from David Raywood. And David asks, Mark, do share buybacks by the company, either for cancellation or to hold in treasury, influence you?
Right, thanks for your question, David. Now, I've only met David earlier on this year, but in that time he's become a very, very useful contact. He's very often visiting AGMs and on the railway network, and he feeds me back with some very, very useful and interesting information. Now, it's certainly an interesting territory, buybacks, and a subject that is regularly covered. Am I influenced by buybacks? I would say no. Am I in favour of them? Broadly, yes. Now, each day across the RNSs alongside my portfolio, I'll be finding that there's been notifications of various buybacks. And I hold these stocks because collectively, I consider that they are a good group of companies. So buybacks, in effect, enhance my position in the business without me personally having to buy extra stock. My holding in percentage terms of the overall business is that bit greater, and I'd like to think in a cost-effective way. Now, one myth about buybacks is that they hand money back to the shareholders. In reality, it is the exiting shareholders that they're selling their holding that receive the cash. But what it does mean is that any future profits are divided between fewer shares in circulation. One of the criticisms of buybacks is whether it is the best use of capital. Now, could the company not find a way to invest this cash back into their business to generate further returns? Would a bigger dividend be more suitable, or should debt be paid down first? Now, on that, some companies add significant debt or borrow in order to pay dividends or prefer buybacks, which strikes me as a classic robbing Peter to pay Paul. One investor I knew, he absolutely despised buybacks and he wanted dividends. He liked the sensation of that more tangible, juicy dividend payment dropping into his account. Now, what did he do with that dividend? Well, very often he just reinvested it, often back within the same business that had paid the dividend, only then, or after incurring tax on his dividends. So if you consider, which he was a higher rate taxpayer, and dividend tax is 30, for him would be 33.75%. That's if he held it outside an ISA, which he did, or most of it. Whereas if that money had been retained within the value of the share, hopefully gaining in capital value, then he could have took that gain at a time of his choosing. And again, the rate of taxation is 20%. For higher rate taxpayers, so I would have thought that would be a better, more tax efficient way for him. Now, for those holdings within an ISA, the consideration is much different, as there are no tax on dividends or capital gains. There are some suspicions as to why directors like buybacks, and by conducting buybacks as opposed to distributing cash via dividends, this should in effect support the share price, and this is often of consideration to directors as their LTIPs are triggered by attaining a certain share price. And also, even without increasing the profitability, the mathematics present a useful increase in earnings per share, which is more pleasing on the eyes and suggests good stewardship. Now, it's just a personal perspective, but I suspect that some businesses at the top of their economic cycle and are politically sensitive and face accusations of profiteering and fear intervention and in that, I'm thinking mostly about windfall taxes, sometimes prefer aggressive buybacks as opposed to distribute what might be seen as grotesque levels of dividend. And with this, I'm specifically thinking of, the oil and banking sectors. Just take a look at the buybacks that are ongoing for Shell and Barclays. These are really large buyback programs. And I think, is it a case of, a big buyback is more convert than a big dividend? So buyback programs are conducted over a period of time and on a regular basis, and this offers the benefits of pound cost averaging. Another alternative is a tender offer, which is a one-off event with a set price at a premium, but has the same result in retiring stock. I've no evidence, but do wonder to what extent the share price is supported whilst the buyback program is taking place, and how it might be effective once this prop of a regular buyer is withdrawn. When it comes to small caps, buybacks may be problematic as they are often highly liquid, with a small shareholder base and a wide spread, and this could only exacerbate the problem. So, making this relevant to my own portfolio, is it buybacks, dividends, or reinvesting in the business? That's is that the priority, or is it an either or? Well, if we take MP Evans that we've covered in a previous episode, they're conducting a modest but sustained buyback program. They've also increased the dividend, and also. They've made several acquisitions, and just on an aside on that, I've recently added to my holding at £7.40. With a larger company, another one we covered, Tesco, on the 13th of April 2023, they committed to a buyback of an additional £750 million worth of shares by April 2024. That means by April of next year, they will have bought a cumulative 1.5 billion since October 2021. So, if we look at the market cap for a crude back of the envelope calculation, that's about 9%, just over 9% of the equity over that period. So, I've not added to Tesco since November 2020 when I paid £2.07. But nevertheless, I'm happy that my holding has in fact grown by, if we inverse that percentage, circa 10%. So, it's a very big subject, and I've hopefully just thrown a few things in to think about. But let us know your thoughts. Buybacks, are they good or are they bad?
Well, that's all for this episode. We hope that you enjoyed it. Please remember the content is for information only and it is not financial advice. If you would like to pop a question into a bottle for Mark, just post your question in the comments and hopefully it'll reach the island in time for the next episode. Thanks again for listening. See you next time.